and welcome to the Crypto Jungle. My name is Baloo the Bear, and here on the channel, we keep crypto simple. We are a no-nonsense channel that focuses on fundamental analysis and technical analysis, and we do so without ever taking paid advertisements or money from other people to create a bias on this channel. So if you're new here, I want to invite you to subscribe. And in today's video, I want to take a look at Bitcoin, just a little bit of a market update. Before we kind of set off into the liquid weekend. We'll take a look at the NASDAQ, we'll take a look at the S&P 500, we'll take a look at Bitcoin dominance, we'll take a look at Bitcoin, and then we'll take a look at a few altcoins. So without any further ado, let's go ahead and just dive right into it. Starting off with the king of all crypto, and that is Bitcoin. We're going to start off here on the 3-day chart for Bitcoin. So we're trying to decide if we have met a local low here. Now, there are a few bearish things that we can look at that could indicate that there is further downside. First, the volatility or the recovery of this range was actually quite weak. Now, if we do comparisons between other accumulation ranges, like the accumulation range back here, you can see we had this very large markdown event, this capitulatory event back in May 2021. But you can see the spread of the candles here. You know, we come down, we have a huge volatile range, we come down again, we come and test. Very large range. Here, it's very small, very small. So, you know, that could just be indicative of the fact that this is just a very different part of the market cycle where participation is quite low, volume is quite low. There is a lot of uncertainty in the markets, both in cryptocurrency and globally with the equity markets as well. So, you know, that could be a factor here. But the other thing to make note of is the fact that we are currently sitting underneath the 200-week moving average, and we actually bearish tested off of the 200-week, which is not an ideal sign. Now, the important thing to note as well is we haven't quite free fallen just yet. Let's actually go to some smaller time frames here. Let's pop down to, let's do the 4-hour. Now, on the previous stream, I did say, you know, oops. Don't need that line there. Give me back my cursor tool. I said that if we broke this area right here, that we would be ranging back down to the bottom of the range to print our secondary test. So I said if we break this, which we did, that we would ultimately be coming back down for our secondary test, which looks as though that's where we're headed. So 17.5 on my chart looks to be kind of the price. Now it could go based off of the close as well, which would be an even 1800. So 17.5, 1800 is kind of the area of the retest. If we hold that level and we get a successful secondary test, now we have phase A complete. Phase A is what you need to start trading. You need to establish phase A before you can start trading any range, whether it is bearish consolidation, whether it is bullish consolidation. You cannot start trading until you either have a trend or a trading range. So this is what we are looking for right now. So there's not a lot going on. I'm not participating in this market at all at these current levels. So yeah, you know, that's what I'm doing. What I'm doing is nothing, and sometimes no position is the position. You'll notice, for those not convinced by the bearishness, you can see once we broke this level, we did get a very severe rejection here. We had a pump at the monthly close. A lot of people got really excited at the monthly close because the monthly close was so bad. How could it not bounce? This is crypto, my friends. This is crypto. So you can see just a horrendous monthly close, 37.22% to the downside here on the index chart for Bitcoin. So the assumption was that we would need to have a recovery bounce. I cannot stress enough the importance of understanding that you will not get a recovery if there is no demand. Demand is what makes the number go up. So if volumes are low, if sentiment is bearish and nobody is willing to step up to the plate to be a buyer, guess what? You're not getting a V-shaped recovery. You're not getting a bounce. You're not getting jack shit. So don't think that the market is so oversold it has to bounce. That's not a thing. That's not a thing. That can be a thing that happens when demand is high, But while demand and trading volumes are low, there is no, the market is too sold, we're due for a bounce. Don't listen to people that say we are due for a bounce. All right, Sedated Psycho, what do we got here? Could this be the start of the bottom range, and we will range between 10 to 20K to accumulate multiple times before the bear market finally comes to an end? How big of a range does the bottom usually look like, or can it be different each time? So the range can be different each time. What I typically like to see is I do like to make comparisons to previous areas. So let's go back onto the daily chart here. So, you know, this was kind of an accumulation that was a comparable accumulation because it was the last one that fell off of a capitulation. And the volatility was pretty extreme. Let's say, you know, about 25% current volatility. Okay, 20%. So we're not too far off. But yeah, you also said, could this be the start of the bottom range, ranging between 10 and 20? If this is the bottom, then the range is going to be between probably 20 to 30. We can't really call the beginning of a new accumulation range where the targets are lower. You have to get to that seller's climax. So if we do continue to the downside, we have not printed our seller's climax, which means this seller's climax line will be deleted. This automatic rally line will be deleted, and we will have to start a new range to prove that we have phase A. So phase A, B, C, and D are part of the Wyckoff cycles, right? Phase A, for those who are new, let's just pull this right over and we'll just draw it manually. For those who are new to the Wyckoff method, you are trying to identify an accumulation range. The price will come in and it will hit the seller's climax. From the seller's climax, it will rally. That will be called your automatic rally. From the automatic rally, you will come back down for your test, your secondary test. Once you've tested the level, you prove that the level is support. The range of the level is set by the automatic rally. So this is how you get your trading range. Once we have that established and we can trade inside of it, you finish phase A and you start phase B. Phase B is just allowing the price to consolidate. You want the spread to shrink. You want the volatility to reduce. You want the volume to decline. And that is phase B. Once you get into phase B, you're either going to be met with another secondary test, or you may get a spring where you break the bottom of the range and come back in. That's your phase C. After each of those events, whether it is just a test of the low or a spring, a fake out bearish move, bear trap in phase C, then you're going to look for higher highs and higher lows that carry you outside of the trading range. Once you have been carried outside of the trading range, the likelihood of a rally is very high. You have a high increased probability of getting a rally. So as it stands right now, we're very early. You know, you can't trade the range until A is defined. And right now, we don't have A defined. There's nothing defined in the trading range at all. So what does that mean? We're waiting. We are waiting. Patience is key. Patience, patience, patience. Warren Buffett once said that the markets are where the patient the markets are where the impatient give their money to the patient. So you have to be very patient at this point in time. We are not in a bull market. You don't have to FOMO. You don't have to move quickly. You don't have to make decisions in a millisecond. That's what's kind of nice about bear markets is you do have time. You have a lot of time to make decisions. In fact, you have more time than you want. Everybody thinks that these things are going to move right away. To repair a downtrend takes a lot of work, and part of that work is time. You are not in a rush. This is not a bull market. You don't need to make snap decisions. You actually get to make very long, thought out, calculated decisions. It's a beautiful thing. Embrace it. So right now I'm doing absolutely nothing. And if I was to guess, I am Baloo the Bear after all. If I was to guess on a time frame, I don't see the bull market starting for another year. I don't see a bullish trend starting, meaning that a trend of macro higher highs and macro higher lows until July 2023. So like literally a year from now. Do I think that we can rally? Of course. I think that we can rally in the short to medium term, maybe get a bearish test under 30K, maybe a fake out, something like that, you know, meander around, come back down to these levels, but I don't see a macro higher high, higher low structure until at least this time next year. Okay. So with decent volume on the dump, let me erase all this crap. So with decent volume on the dump to get to 20K and 17, is there a chance that this could be the bottom of the bear range and we range multiple times between 20 and 30? Yes, that is a chance. That is a chance. But we're front running that idea because phase A hasn't completed. Phase A needs to print. We need to, and you know, that's what's nice about a downtrend is phase A never prints. Phase A will never print in a downtrend. So right now we're waiting, right? Like if this was the capitulation, we labeled this as a seller's climax. We had our automatic rally, and then we come down for our secondary test. Guess what? The secondary test didn't hold. The secondary test didn't hold, so we didn't get a trading range. We fell to the next level lower. So now we're doing the exact same thing again. We have our seller's climax. We got our automatic rally. We're waiting for our secondary test. If the secondary test doesn't hold, we go down to the next level. This is why phase A is very important to wait for. You have to wait for phase A. You need to establish a trading range. You need to establish a support range. So if the secondary test doesn't hold, if we come back down to 17.5 and we break through it, 10K. You know, then you're going to the 10K level. Then you're looking at, you know, the potential for the next area where a potential trading range will develop. So that is what we are waiting for. Patience, 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 patience. Of course, with the chance to still dump and find a lower range if it doesn't hold. But 17 to 20K volume looks... There was a lot of volume. We'll give it that. It's not really the emotional capitulation I was hoping for. There's still a lot of hope out there in crypto Twitter. There's still a lot of people that think this is going to bounce. And that needs to be absolutely destroyed. So, you know, there are fundamentals to take into account, of which the fundamentals are money is no longer cheap. Interest rates are climbing. The Fed balance sheet is going to be reduced. Don't fight the Fed. That's the fundamental angle. Then there's the technical angle. We are in a macro downtrend with lower highs and lower lows, trying to find a floor. And then there's the sentiment, the herd mentality. It's a very important thing to be objective on. The herd is always wrong. What is the herd saying? We found a floor. We are ready to rally. We have hope. They're still buying shit coins. They're still buying fucking shit coins. They want to know what's the best altcoin to 100x. They want to know what's the best altcoin to buy during the bear market. It's not until the point at which people say every altcoin will make you a poor motherfucker, don't ever touch an altcoin ever again, that we find a floor. You know, bear markets make Bitcoin maxis. That's just how it works. And we don't have the herd of this cycle converting to the Church of Bitcoin. So they're still wondering what altcoins to buy. We need a little bit more pain in terms of sentiment. Sentiment pain can come one of two ways. It can come through price capitulation, or it can come from an agonizingly boring market where Bitcoin trades sideways for a year and altcoins grind down, or altcoins do nothing. So it's one of two ways. So we have a potential to be at the bottom, but we also have an equally plausible potential that we take another leg down. Does volume mean anything on traditional stocks like the S&P and the NASDAQ, the way we look at it on Bitcoin? Volume, maybe no. I don't think you need to trade the chart that you're looking at, and you can make decisions on the volume that's going through the chart that you're looking at. But no, don't cross-contaminate analysis like that. If volume is coming in on Bitcoin, it will show up in the chart. So if volume's coming in on the NASDAQ and volume's coming in on the S&P, but it's not coming in on Bitcoin, what does that say? It means nobody gives a fuck about Bitcoin. So, keep going till it holds. As the volume keeps increasing, could be a sign that the holds are stronger each time. Yeah. That's kind of doing price analysis, price spread analysis. So you're going to think a little bit more in terms of, effort versus result. So if volume represents the effort, what is the result? So if you get a capitulation on a high candle, there was a lot of supply that emerged. But if you get a very large candle and we don't really go anywhere, then that's a lot of demand. You're seeing a lot of demand there. So volume and price move together, or they are connected, and the context of that is really important to take into account. Cryptex says Bitcoin to 6,000 USDT. Possible, if we even have USDT at that time. I just want 0.01 Shiba. Let's go. See, that's what I'm talking about. People still want altcoins. If they haven't learned, people haven't learned that you're buying shit coins with absolutely no value. You think something useless in this world has value. You don't understand the value of Bitcoin. You don't understand the potential value of Ethereum. You think buying a dog coin is a good idea. This is exactly what I'm talking about. This is the herd mentality. These are the people that need to learn the hard lessons that haven't quite learned it yet. All right, let's take a look at traditional finance. NASDAQ, we're wanting to reclaim this level. So things are looking good in terms of a divergence, and there is no volume on this one, but that's okay. But we're wanting to reclaim this level, and so far we're doing okay, right? We have a low. Let me get my pen tool here. We have a low, we have a lower low, we have a lower low, and we are potentially, it's kind of weak, but potentially holding this higher low. And if we can get that, then we can reclaim this level. If we reclaim this level, the next target is up here. If we can get past this level, now we have an uptrend. If we have an uptrend, Bitcoin will likely rally. If Bitcoin rallies, altcoins will rally, and we can have that trickle down effect. Ultimately, I don't see the NASDAQ reaching a new all-time high, or at least I don't see the NASDAQ breaking a new all-time high. I think that we get something that... let's go to the weekly chart, where we get a potential bounce maybe up to this level for our lower high on the macro, and then we have the whatever event. It'll be called a black swan because nobody will have seen it coming, but yeah, there will be some sort of global event that causes a potential unwinding in the stock market, and it will be labeled as a black swan, something that was unforeseeable. And yeah, it's, this is what I'm expecting to happen. The fundamentals are very, very clear. Money's not cheap. When money isn't cheap, markets go down. It's really that simple. So as long as the interest rates continue to increase, we're going to see valuations of assets go down. Thoughts on stables right now? I don't have a lot of confidence in stable coins. Listen, we have been playing with the money printer. Okay, it's really that simple. We, in crypto, have been printing our own money. That is not a good thing, and that is going to be the target, the main number one target of regulation. I hold basically zero stables right now. Zero. I hold zero stable coins. Is that overcautious? Potentially. Yeah, I could be overcautious, but to me, I just don't think that it's worth the risk. So I don't want any pegged asset. We need regulatory clarity, in my opinion. We need regulatory infrastructure, and we need central bank digital currencies to weasel their way into the cryptocurrency networks. So until that happens, we are the wild, wild west, and I don't think that that is going to be a very safe thing to count on. These stablecoins are not dollars. They are cryptocurrencies, and they are cryptocurrencies that are unregulated and pegged to an asset that is regulated. So it's certainly going to be the target. Feeling my USDT might be sketch if things keep going the way they are. What is the alternative? Pax Gold. There is no alternative, unfortunately. They're rich K. The alternative, well, there isn't one. It's money in the bank. That's the alternative, is cash in your local bank, fiat money in your local bank. That's the alternative. Or Bitcoin. And now Bitcoin's volatile and Bitcoin could potentially go down, but if you want a safer currency, it's basically, it boils down to this. If you want to be in crypto, Bitcoin on a ledger. If you want to be in cash, money in the bank. If we're talking safety, that's what we're talking. Safety, crypto, Bitcoin on a ledger, cash, money in the bank. There is no alternative. All right, taking a look at the S&P. Bouncing off our mean of the channel. A little bit of volume, but nothing too great. Again, we have this kind of higher low structure that is beginning to print. So we do need to kind of break past this level here. I want to see us reclaim 390 in the S&P. Get above 390, stay above 390. Now we have the ability to kind of rally back up to the top of the channel. So that would be a positive thing. Again, I don't see us breaking a new all-time high in the S&P. That will probably be an area of a lot of supply as the fundamentalists will realize that money's no longer cheap and it's not getting any cheaper. So they're going to be offloading a lot of bags. We're going to see a lot of supply come into that area. And yeah, let's take a look at Bitcoin dominance. Bitcoin dominance is holding support at my little blue box of support here at the area of the breakout. So looking like 43% seems to be the support range here. If we begin to turn around here and rally, that's going to be really bad for the altcoins. So altcoins did get a little bit of a rally after a treacherous downtrend. We might be taking a pause before those altcoins continue to bleed out to the downside. Speaking of altcoins, let's take a look at ETH. Similar story on ETH. You know, we're trying to find that trading range. We're trying to reclaim levels. We lost this level right here. So it's looking like seller's climax automatic rally, looking for our secondary test. Let's go ahead and label it. Automatic rally. Seller's climax. So we have a potential range. We're wanting our secondary test. Last few days here, the last 3 days in a row, we've been printing a new price that has not gotten above the weekly average price on the exponential EMA. So that trend will continue and will probably carry us back down to the bottom of the range, where I would imagine some demand emerges, gets us back on top of the EMAs until we can get the weekly price above the average monthly price. I don't expect any sort of momentum to enter into the altcoin space, specifically on Ethereum. And yeah, just it's pretty closely correlated to what Bitcoin is doing, and Bitcoin is waiting for the NASDAQ. So really the only chart that you need to pay attention to on the macro at this point in the game is the NASDAQ. So, you know, as long as we can reclaim these levels on the NASDAQ, it will trickle down into cryptocurrency. But again, this would just be a relief rally. This would be an opportunity for you to close out some positions, take some of those profits, or at least mitigate some of the losses, and you know, get ready for the real downtrend. Get ready for the real down move. Let's take a look at Monero. Monero is one that I've been paying attention for a while. I really like Monero. And I think that it has really, really strong fundamentals that the world just hasn't quite woken up to yet. So if we start to see a lot of unwinding on these exchanges, and you know, KYC becomes a thing where people may necessarily not want KYC, then we could really see some interesting things coming out of Monero. Looks like a bearish test under the bottom of this Wyckoff Accumulation range. So if this ends up being a spring, there could be a move in Monero, but as it stands right now, we're kind of breaking out of the range in the context of a bearish environment. So I wouldn't be surprised if we just lose this level, come back down to you know, this area of the longer term accumulation range. So we'll see you back down at you know, under $100, which, you know, is not a far a drop from where we are right now at about $1.20. Do you think longing Bitcoin dominance or trading it at all is a good idea at any time? No, I like to look at Bitcoin dominance just as just to tell me what's going on and to monitor a bias. So, you know, we're sitting on support. When Bitcoin dominance is in an uptrend, it can mean that Bitcoin is rallying, or it can mean that Bitcoin is falling. So that's tricky. It's not really something that you can get some clean, clear information off of. When Bitcoin dominance is in a downtrend, it usually means that altcoins are rallying. So it's a lot clearer when Bitcoin dominance is falling on how you should position. But if we're looking for a bounce here, the bounce can come in the context of Bitcoin being on a rally, or it can be in the context of Bitcoin falling. So it's not really a good area for a you know, trying to trade Bitcoin dominance at this spot. Okay, how much time do I got? We got a little bit of time here. We'll take a look at Avalanche. Let's actually just take a look at Shitcoin Bingo. Pull up the Shitcoin Bingo chart. The Shitcoin Bingo playlist. Cardano sitting under this trend line. This is a very well established, clearly defined trend line. If we start to break out of this, I think we can trade sideways and build a cause for a rally in Cardano. But as it stands right now, nothing super exciting. Alphanumerics, still Cardano continues to print new weekly lows, staying below the 7 EMA on alphanumerics. So, you know, more down. As long as it stays under this blue line, it will continue to stay under that blue line. Let's take a look at Ape. Ape had a little bit of a rally, still underneath that blue line. As long as it's underneath that blue line, it'll stay under that blue line. CRO, well below the blue line. CRO is a very, very shitty token, very shitty project that does trap a lot of people. You know, they had a really good marketing budget here when Matt Damon said, buy crypto or you're a pussy. But yeah, you know, we've been below that EMA ever since. And as long as we stay below that EMA, or as long as we are below that EMA, we will stay below that EMA. Taking a look at Doge. Doge wanting to take a chance at getting above this. Unable to do so. Very oversold on the weekly chart. Doge is ultimately a completely garbage shitcoin. Same with its retarded younger brother here, Shiba Inu. Both in a bad position for further downside. Taking a look at Solana, one that isn't completely shit. It's not a decentralized project. It is not a very crypto project, but it is a blockchain, and it does have certain blockchain specific applications that I think it fills the need for quite nicely. NFTs, gaming, and trading apps I think are very applicable on Solana, but as far as DeFi applications, storage of large amounts of wealth, or trust in counterparty risk, it has none of that. It is not very decentralized. It is a shitcoin in my eyes. And it's below the EMA. Below the blue, stay below the blue. Taking a look at Theta, below the blue, staying below the blue. VeChain, below the blue, staying below the blue. XRP, below the blue, staying below the blue. I can't believe that people still think that XRP is worth something. XRP is fucking going nowhere. Nowhere. If you are a hardcore XRP holder, fuck, man. Buy some Bitcoin. Just buy some. Just buy some Bitcoin. Some. You can still hodl your XRP, but buy some fucking Bitcoin, man. Because what you think XRP is going to do is exactly what Bitcoin is going to do. Zilliqa. Another shitcoin. So all of them are in the same position. All of the altcoins are in the exact same position where they are, technically in a very strong downtrend, lots of momentum to the downside, trapped below the EMAs, until we close just a weekly candle above that 7 EMA. There's really no hope in any sort of rally in any of these assets. Do you like that link? XRP, the standard. Yeah, the XRP standard. The standard is XRP never goes anywhere and it never will. That's the standard. Do I like Link? I like what Link does. I will never own any Link. I don't think there's any point. I like what it does, but that doesn't mean that I need the token. And this is something that a lot of people don't really understand. Like, you can have apps that you really, really like where you never take a position in the app. So as it stands right now, Uniswap is one of the most groundbreaking applications. Uniswap sparked the bull market. Uniswap alone sparked the bull market because you were able to easily swap one token for another using a liquidity pool. The app was brilliantly designed, redesigned again in a very brilliant way, and the Uniswap protocol is fucking brilliant. It's a great app. The token, there's no point. There's no point in buying the token. There's no investment in buying Uni tokens. So why would I buy it? Taking a look at Chainlink. Chainlink in the exact same position, a little weaker than the other ones, weaker than Cardano, yada, yada, yada. Let's take a look at it on the Ethereum chart, the Ethereum pair. Very weak on the Ethereum pair. Local little small rally here on the Ethereum pair, but Ethereum's not doing too hot. Let's take a look at it on the Bitcoin pair. Oops, not wrapped BTC. Again, worse than the other two. So, if you were going to part with your dollars for Chainlink, fine. But, you would have been better off holding Ethereum or Bitcoin instead of Chainlink. Okay. I think, that's all the time I have for today. If you guys are interested in this indicator, by the way, let me just hide Chainlink. The alphanumerics indicator. Let's pull up BTC. USD. It's a really simple indicator to follow. We follow it quite closely in the crypto jungle. It is responsible for a lot of the signals that we follow here. When you're trading sideways, no indicator is perfect. When you're trading sideways, you get a lot of false signals. But what's nice about alphanumerics is it closes you out, usually in profit. Even when the signal's not a good one, it's going to close you in profit. So bullish down here at 36, bearish up here at 98, bullish down here at 73, bearish up here at 88, bullish down here at 7K, got you out at 51, put you back in at 40, took you out again at 55. So it's a really elegant moving average indicator that's been really well designed by alphanumerics. Shout out to Matt. Thank you for A, being a part of the jungle, and B, creating this really simple indicator that honors the work of Tyler Jenks. So thank you to the creator. And if you guys are interested, links in the link tree, which are linked below in the show notes here on YouTube. Not sure if I have it on Twitch. I might have to update my about me on Twitch. But and if you want to learn the Wyckoff method, learn how to analyze charts and how to trade the biggest moves in crypto, then I encourage you to sign up for the VIP trading group below. We aren't doing the promotion anymore. You guys missed the promotion, but it's patience is key. We teach you how to identify when the largest moves can happen. I can teach you when the bull markets are going to happen. And not a lot of people teach the Wyckoff method, and they use a whole bunch of shit that's just going to give you a bunch of false signals. The number one thing, and I'll give you a crash course right now. The number one thing to pay attention to is long-term sideways trading environments. When you get a breakout of a long-term sideways trading environment, you usually get a pretty good markup. So right here, the accumulation was about 45 weeks, or no, 128 days of accumulation. So about 3 months. That's what you need. You need accumulation. You don't get markup without accumulation. Everybody thinks, when you find a bottom, you bounce. When you find a bottom in a bull market, you bounce. When you find a bottom in a bear market, you lay flat, you lay down, you stay put. And when you stay put, you go into accumulation. And when the accumulation takes months, preferably over a year, then you have built the cause for a bull market. So I encourage you to join and learn this method. And we will see you guys in VIP. So that is all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. And if there are any projects that you want me to take a look at, maybe wait until I don't completely tear them to shreds, because it's not about the altcoins right now. But please do trade safe. It is a jungle out there. Peace.